Hi, and welcome back to Property Insight. My name's Mark Ashworth.
I'm Neil Harding.
And today we're going to talk to you a little bit about what we're doing in the property market right now with our portfolios and our property businesses. Obviously, it's a time where people are thinking about whether or not they should start a business in property, whether they should buy more property or hang fire or wait or what. So we just thought it would be interesting for you guys to hear about what we're up to and what our opinions are. So Neil, tell me a little bit more about what you're doing right now. Are you buying? Are you looking? Are you holding back? Or
So I'm always on the lookout for a property investment, and if there is a great deal to be done, I think for years now I've always thought, right, if there's a great deal to be done and it stacks, I'm in and I'm going to do it. And that's always been the case in any market since I've been a property investor. So right this second, I don't have anything with my conveyancing solicitor that's going through. I'm very much looking out there, seeing what there is. I'm doing viewings. So I think it's always important to do viewings because you never know where the next deal is going to be. In particular, at the moment, I'm finding that auctions are quite a good place to look for deals. I'm seeing quite a few properties that are coming on the market at a good price, and obviously you don't know what it's going to sell for until the auction happens, right? But you can offer pre-auction. Sometimes there are pre-auction deals to be done. Sometimes there are post-auction deals to be done if it doesn't sell. I bought a property in an auction last year at a really good price from a distressed landlord, and I'm seeing properties that are coming on the market that I think are very similar. I think probably landlords that are looking to get out of the market have decided they've had enough. So I'm doing viewings on those, and I'm also reviewing my portfolio holistically for all sorts of reasons in all sorts of ways. So looking at it from a property by property, which properties are making the most rental profits, which properties are incurring most on repairs and maintenance bills, which properties are probably underachieving in terms of rent they're achieving right now, and perhaps there's rent increases coming up over the next 12 months. I'm always looking at what I think a fair market rent is on the portfolio across all my properties, and then considering what I want to increase the rent by. I try to increase the rent on all the properties every year, even if it's a little bit, rather than leaving them flat. And that's 3% inflationary increase is quite typical in years gone by, but it needs generally to be more than that at the moment.
yeah, I think there's always a bit of a contentious subject about rent increases. I was talking to a lady at our Cambridge property community meeting the other week, and she was saying that she had a particularly good tenant and that she didn't want to increase the rent because she had a good tenant and they'd been there for 5 years. And we kind of talked about the fact that it's important that you keep your properties in line with market rent, and I'm not suggesting at market rent, but in line with it, because if you don't, what happens is that if that tenant decides to move on, it's almost impossible for them to do that because the rent increase is so different that actually then what happens is that then you end up getting, I wouldn't say stuck with the tenant, but you certainly then have a tenant who's staying there because it's cheaper.
And they may get stuck with the house, right?
Yeah.
From their perspective.
Yeah, so they can't move on with their lives because things haven't been kept in line. And then all of a sudden then you analyse your costs and see that your costs are increasing. So let's say, for example, you come off that fixed rate mortgage and your interest has gone so much higher, or you start getting an increase in your letting agent fees and perhaps your mortgage product fees if you were going to change onto a different mortgage, or your solicitor decides that they're going to put their prices up because with inflation everything else has gone up. And then all of a sudden your property that was making you profit 2-3 years ago is now costing you money, and so therefore you have to put that rent up drastically. And that not only does that then affect your tenant negatively because it's such a large increase, it can cause some relationship issues between you and the tenant. So it is really important to make sure that your rents are reviewed on an annual basis, even though you may only put them up a very small amount. So typically in the last 10 years, with inflation being very steady at around about 2%, and in some years maybe a little bit less than that, putting rents up drastically wasn't really an issue. It might go up a little bit, or you may not have put them up. Maybe it would have been a 2-year wait before the increase. But now we've had this massive surge of inflation with everything going up. It is really important to make sure that you keep it in line. And so doing that yearly is really important. So, we're doing it now, but actually really you should make time to do it every single year. And also, that being said, just review the valuations of your property too. So if you've got a good relationship with an estate agent, and do have a valuation review done, because that will also impact the remortgage that you take. So if you're remortgaging at 65% versus, 65% versus what it may have been 75% if the property's gone up in value, you could actually be eligible to have a slightly better rate because the loan to value's gone down.
Yeah, absolutely. Yeah, and for rent increases, I always, first of all, start the conversation with my letting agent who has expert knowledge in their market. And the conversation begins between me and my letting agent with, okay, what's the tenant paying right now? And what's the market rate for that property? That's the initial conversation that I'll have with my letting agent. And then from there, we'll say, okay, well, what does that gap, if there is a gap, what does that gap look like? And hopefully there's not a huge gap, but that's the starting point for the conversation. The next part of that same conversation is, what do we think is a fair increase for that tenant, given the relationship that we have with that tenant, what we know about them. And we will take into consideration things like, what's their economic situation? What can they afford? When they moved into the property, we probably did credit reference checks on them. We will know what their earnings are. So it needs to be something that's affordable and fair. I want the rent to be affordable for the tenant, but also, of course, you need to be thinking about your own financials as well. And then I'll let the letting agent have a conversation with the tenant, say, okay, this is what we're proposing. How do you feel about that? And they will have that conversation with the letting agent, with the tenant, to talk about it. More often than not, the tenants are open to the conversation. On top of reviewing the portfolio, reviewing rents, and viewings and auctions, I also have a mentee who I know watches this, so hello to you. And yeah, so I have a mentorship program, which is thoroughly enjoyable for both myself and my mentee. So we meet every week and have really good sessions, working sessions. That's a mentee that I've taken on because they are really committed and serious about property and want to achieve something very similar to what I've achieved. So between us, we felt as though there was a good fit and that I was the right mentor for them. So yeah, really enjoy working with them. And there's, that's a 6-month program, which we're halfway through at the moment. So yeah, that, and then also I'm reviewing a lease that I have on one of my leasehold flats, and I'm extending the lease. So I'm applying at the moment to the freeholder for a 90-year extensions under the statutory lease extension process. So every leaseholder, since the law changed a year or two ago, you're able to apply for a 90-year extension to the lease. And as part of that process, when you do that, not only do you get the 90-year extension, but also any ground rent that was payable disappears and becomes a peppercorn rent. So that's also a good part of that as well. So on that one, the ground rent will disappear from £350 a year to 0. Or I will have to pay them a peppercorn if they ever demand it from me, but I'm assuming they won't. So I'm doing that as well. And I think the remaining years on the lease, we're going down to 91. So one of the reasons why I'm doing that, as part of the review of my whole portfolio, that 91 years remaining on the lease is not massively low, and it's certainly not as low as the 80 years marriage value period, where sometimes there's serious restrictions on leases. But on some, what I've noticed is, as the mortgage market tightens and becomes more restrictive, some lenders, they don't like certain clauses in lease agreements, like rent increasing every 10 years or doubling every 20 years or doubling every 25 years, or rent going from 200 to 400 to 600. They all have their own rules. So one of the things that I like about it, not only is that, my strategy for that property is to hold it forever, so I knew I'd have to extend the lease term at some point, but also by doing away with the ground rent completely, it opens up the mortgage market for me the next time I remortgage that property completely to almost whole of market. So I thought now's a good time to do it before I have to remortgage that property next year.
I think your strategies are fairly similar to what I've been up to. Certainly, rent reviewing and value reviewing and portfolio reviewing is in there. Part of my strategy not to leverage too high, or to certainly bring the leverage down over a period, just for a bit of added protection. So I would definitely consider myself to be a low risk investor. A lot of people think that investing in property is risky. I think not making any investment is actually a risk in itself. So it's just that I've chosen property as a strategy. But also, I'm definitely in the market for a deal. I haven't looked, the last time I bought a property was last April, which we did a full refurb on. But since then, as the market's went a bit crazy as we came out of COVID, wasn't really even looking, to be fair. Now I've gone back into the market, and I'm certainly back with the agents, putting out some feelers there to see whether there's any potential projects there to either to add value to, or even now, you know, certainly in the last couple of years, there's been situations where properties have been on the market which have been, let's say, doer-uppers needing work, but actually by the time you factored in the time and the money and the effort and the cost and all the rigmarole over refurbishing a property, that it's questionable about actually how much value you're adding. So, you know, if it's costing you 40k to put something right, and then there's only 40k being put on the valuation, you kind of think, why don't I just spend the 40k in the beginning and have a property to rent straight away? So yeah, I'm not discounting properties that are ready to go as well, and I've certainly got a selection of those in my portfolio. I have some which I've done up entirety, even back to brick, and some that I've just bought and rented straight away. So yeah, it's definitely looking at doing some more of that as well. So yeah, I think that probably just about wraps stuff up for what we're both up to at the moment. And of course, producing wonderful, interesting content for you guys to consume to help you on your property journeys too. So we hope to bring you some more stuff, and we hope you found this video insightful.
Yeah, thanks very much.
So we'll see you next time.
See you next time. Bye.